Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. When it comes to news, well, we have the Winter Nexus that has launched this week, so you can run a lot of different sites, combat sites, mining sites, I think exploration sites as well, in order to earn some skins and some other rewards. From what I've heard, if you have somewhat efficient chips, then you can definitely get through all of that in a certain amount of hours. So it's not like it's gonna take you days of grinding or anything like that. Another bit of news that I actually just noticed is that CCP added another page to the EVE Online website, to the main website, specifically focusing on the new frontline system for faction warfare. I think it looks very cool and very promising. Of course, it'll be extra cool when we get the Allegiance system, which again should be coming in Q1 for next year. So for the holidays, I think we've got a nice little event that we can grind through, and then I hope that we get some news and some testing on that Allegiance system. We'll take a quick look at the New Eden store as always and see if there's anything happening here. We do have a sale on the Yule Storm Chaser pack that has I think only one skin. Oh, I thought it had because it showed the three ships here from the Sisters of Eve. I thought we'd have the full pack, but no. This skin is back, of course, the Yule Star skin, which has basically like a countdown. That's very, very cool. And that's hot. Other than that, let's take a quick look at the services. Yeah, we got that pack. That's on sale, but that's it. So you basically, if you sub for a 30 days or times 3, and then you get a free skin on that one. All right, there we go. So let's dive into the market. Let's see what is happening. You may already have noticed on the ticker that the Tenku is up substantially. That of course is due to the Winter Nexus. So that's going to be potentially one of the big impacts for the market. And then we also have the new ores that I think are out at this point. I haven't explored that myself, but that could have an impact on minerals, of course. So let's get started with pilot services, and these are coming in at 2:30. Like that, and let's get started. Here is the plex chart. Pretty good news for people that want some cheaper prices for 30 days of Omega, because clearly we are going down slightly here for the price of Plex. In Jeddah itself, it's 4.9 billion for the sellers and 4.64 million for the buyers. Look at that demand dropping off a little bit here. That can of course go two ways. We can either have enough supply that buyers are just filled, buy orders are filled up to a certain price point, or there is a little bit less interest in EVE Online at the moment. That's a possibility as well. I have to say, outside of the game, there's quite a bit of like hype building happening around other games. We get the World of Warcraft expansion, we got the new league for Path of Exile. Some people don't enjoy it. I actually find it a very cool league mechanic, especially when you get a build that works for it. And then we get all the Diablo stuff as well. So overall, there is definitely a lot of competition out there for EVE Online. I wouldn't be surprised if there is a little bit less demand, but that does mean that we potentially have cheaper Plex on the horizon. In the Tranquility Trading Tower, a little bit of competition, but of course, since this can also be traded through the app, Jeddah 4.4 is on the cutting edge. Next up, we've got the multiple pilot train certificates. Same bit of hesitation, but at a very high price point, of course. But you can tell here, 20-day moving average, 5-day moving average starting to come down a little bit. Volumes are very low. Oh, that's maybe something that could give us an indication as well. Plex volumes are actually not doing that bad, I would say, compared to the entire plateau here. When we even got max prices above 5 million, we are slightly down, but in a similar range. So that's pretty good, I would say. Multiple pilot train certificates, though, those volumes are down substantially. 1.9 billion for the sellers, 1.75 billion for the buyers as well. Bit of margin, but not that much that has opened up here as well. For the skill extractors next, we've got a much clearer picture, but a similar chart, of course, to Plex. that is starting to come down from the high point where we went above or touched 600 million ISK. Volumes actually again not as good as when we get like full action and potentially a sale and things like that as well, but definitely decent volumes in the last couple of days, bringing the price down. That actually gives a little bit of credence that there might be some extra supply coming in as well. 550 million for the sellers, that's substantial, substantially lower from its high point, and then the buyers are at 528. Still a decent amount of demand here again for the skill extractors. It must be supply, at least for the extractors at the moment, that is putting pressure on the price. The impact on the injectors, here are the large scale injectors that are continuing to go back up, and I find this to also be good news for trying to gauge general interest in the game, because this should mean that there is pretty strong demand for large scale injectors at the moment. That to me is another indication that there is stuff brewing and happening in EVE Online at the moment. Could still be the faction warfare stuff. People might be sucked into it. The new system may have a lot more retention. So again, I'm really hoping that the Allegiance system will be very cool and that there will be a very diverse set of activities that you can join into. Not just go in there, shoot some stuff, but also we get the hacking stuff, we get maybe mining stuff, maybe even donating real resources, make that another potential faucet for resource or whatever it is that CCP wants, so that everyone can get in on that fun. At least the storyline is definitely developing that the empires are gearing up for more action, and maybe players are as well through the skill point system. Then we get the small scale injectors following suit. So correlation, it's basically unstoppable, but there is a higher price to be paid. So let's take a quick look at the actual price points. 950 million almost for a large scale injector. That's almost a billion ISK for a large injector. That is a lot. 885 for the buyer, so a little bit of a gap does start to open up here. And this might be due to a lack of supply on higher volumes though. So I would say that there is still strong demand for the injectors. The volumes for the small scale injectors are flat, but 192 million for the sellers, 176 for the buyers. That is decently close, and yeah, looking like it is going up in price here as well. That should mean that the daily alpha injectors are going up as well. Nope, to my surprise, these are holding very steady at a 40 to 50 million ISK price range. 45 million for the first seller in station, 46 to 47 for most, and then 42.7 for the buyer. So if that's your daily routine, it's still less than 50 million, which is in my opinion decently doable, especially if you would do stuff like exploration, and if you would risk a trip in wormhole space, for instance, in a very cheap frigate. You can get this done in a short amount of time. Mining for an alpha player is going to be a different story, but still, if you want it a little bit cheaper as well, you just set up a buy order, 43 million, and you're very likely to grab your daily alpha injector. And then finally, we've got the hypercores as well that are starting to show signs of wanting to go down as well. Very hesitant though, so super close range between 20-day, 5-day moving average and the daily average, but you can clearly see at the tail end that we are starting to come back down a little bit. 509,000 for the sellers, 470 for the buyers. That is a very narrow margin. Volume wise, we are starting to lose a little bit, but still I would say that we are doing generally quite okay in volume since basically the expansion launched in the beginning of November. So overall, I would say we're holding quite strong, and it might just be a little bit of extra supply that is and maybe a little bit of the hype dying down. But again, look at since early November, the volumes were still in the same range here for the plex trade, so slightly less pressure on the prices for the pilot services this week. Next up, we've got the minerals coming in at 910. There we go, and as always we start with high sec and with tritanium. That has a very bad chart yet again, but it's okay. Actually, looking at the data, you can clearly see what's happening. We are losing ground again. Same thing on the ticker there. 433 now for the sellers, 412 for the buyers. It's still above 4 ISK, but we lost a 4.5, and that is way behind us since there is still massive supplies coming in. 600 million here, 600 million units here, another 400. 300. So there's definitely a couple of billion units awaiting us up to the 4.4 ISK for titanium. That is a very high volume, especially compared to the buyers. Someone is buying half a billion at 410, but we're also starting to bump into that just because there's that much supply. Well, more activity, more supply, and lower prices are not abnormal. Then we get pyrite, should also, in my opinion, struggle, but actually managing to maintain the price range decently well. The reason I think it will struggle is because, well, an extra source of pyrite has, of course, been introduced into the game, and as a result here, we're still at 1063 for pyrite. Strange one system sale here coming in, and oh, that's also a sell order that basically just had 8 units too many, so that'll get picked up. But yeah, 1087, 1090 for the sellers, 1063 for the buyers. Very narrow margin here, but again, the volumes are the problem. 130, 135, 180 million coming in here on single sell orders. Buy orders are basically mostly half of that. There's a little bit too much coming in for pyrite as well. Still, we're holding that 10 ISK, so overall I think it's still okay to do like a 50-50, or at least that's what I would do, but I wouldn't sell everything that we've got, especially for titanium and pyrite at the moment. And then we'll take a look at Mexalon. It actually has a little bit of bump on volumes, so you can clearly see here that demand can have an impact on the price. It is being managed by the market though, so we are back on the pressure trend at the tail end. Still, we are talking 65 ISK for the sellers and 65 ISK for the buyers as well. Very close narrow margin here between sellers and buyers. And then we have to dig a little bit up until 656, so above 66.50 before we see some substantial volumes, and that's really the difference here. So you get 60 million here, but also 60 million here, a bit more balanced around the 65 ISK price mark between suppliers and buyers, and so a little bit of extra demand can actually push the price up for Mexalon. It doesn't last very long though, since of course if you're mining in HiSec, what you want to focus on is Mexalon under the current charts. Then we've got Isogen, where we could see a real impact from the changes from the new ores being introduced, and there it is. So we get a very sharp drop off, although just before that we managed to reach a 1-year high point of 545 ISK, so almost 550, pretty impressive. But now the new supplies are going to keep us in check. 408 for the sellers, 378 for the buyers, basically back down to the 400 ISK mark. And well, this was actually something that CCP mentioned was the whole point. They wanted to make sure that some bottlenecks for the capital production in nullsec would not stay as strained as they are. And well, Isogen of course has had quite a gain for over the last year or so, from 125 to, well, 550 ISK. That is of course a substantial increase in cost, and so that new supply is bringing a little bit of relief on the price here. Noxium then actually this is probably like potentially something that is actually a response to this. Well, there's more Isogen available, so we can actually go all out for our production cycles, but that also means that we need a little bit more Noxium, and Noxium just made its way back above 1000 ISK, actually 1170, a substantial gain over the week, and buyers are almost at 1000 ISK, but they're very careful here, trying to still keep that Noxium price close to 1000 or below 1000 ISK. But I think this is a battle that they will end up losing, because, well, the goal from CCP is very clear: try to keep the furnaces burning in nullsec for large ship production across the game. They also show that they're more willing to intervene into the game, but they can't do everything at once. And well, here they came out with Isogen, Megasite, Pyrite, and Zydrine, if I'm not mistaken. Noxium, no, but if they make more stuff available on the other end, then that does mean that demand here will pick up. So I think that there is a balancing act that will need to be done with those new supplies through minerals, and it's not only going to be pressure on the prices. There could be a little bit of upwards pressure on this as well, increased prices such as here in Noxium. Including, of course, the fact that some players will no longer be mining Noxium, but will perhaps be focusing on the new resources. So it's all far more complex than just we make more stuff available, that goes down in price, rest of the market stays the same. It's definitely not what's happening or what we should expect to happen. In Nelsig then, we've got Zydrine that also loses a little bit of ground, but actually stays around the 3000 ISK mark, 2900 for the sellers to 838 for the buyers. That is a little bit of margin that opened up here as well between sellers and buyers. It's going to be interesting to see if this decline in price has any legs, but in the last couple of days you can see again volumes are up, prices have already stabilized. Let's take a quick look at Noxium. Yeah, again here volumes going up, and thus the price is starting to go up here. So I think basically the removal of some bottlenecks is starting to put strain on some other markets here as well. And then finally we've got the megasite market that has a slight correction as well, but it is holding a very steady at the 3000 ISK mark. Actually no, 2684. So some more supplies are definitely finding their way to JITA here. 2600 for the buyers though, so that margin is closing up quite substantially. So we did lose a little bit of ground, and volume wise we don't see that much, except that, well, a couple of days ago we definitely had a higher volume here as well, with slightly lower prices, but that in my opinion does mean that we should not expect as sharp a drop off in the other segments as here with Isogen, and that's another indication that I think Isogen was maybe not the real problem, the real bottleneck, because there are still old reserves out there, but of course CCP has those numbers. Maybe they're anticipating a little bit, and so there was room for Isogen to drop even more. But for the others, all those supplies are very welcome, gobbled up by the market, and they want even more stuff to be available, and so they're still willing to pay these very high prices for megasites. So there's probably still some old reserves that are making Isogen go lower more quickly, and we even have Noxium that's going up higher. So if you're not in high sec and you can produce minerals, I think you're looking at a very good time price wise, and demand just stays very strong. Next up we have the PI market, 1710. Let's take a look at that. So super strong summer, super strong fall. We are starting to come into the winter. CCP has made more mineral resources available, so that could mean even more demand for PI materials, considering that, well, they're now needed in capital ships as well. Here are the broadcast nodes. Did have a high point above 2.5 million, not very sustainable. Stayed above 2 million for about a month, started to drop off, but you can see here at the tail end that we have started to move back up in price. 1.8 million for the sellers, above 1.7 for the buyers. So again, narrow margins, strong demand is definitely here. It's going to be interesting to see if after the mineral increases in volumes, we're starting to see some increased volumes for some of these as well. But for now, this one, well, a little bit of upward pressure, but nothing too major. Construction blocks staying above 10,000 ISK is pretty impressive. 11,000 in fact for the sellers, and above 10k for the buyers. That's a almost normal margin. It is definitely showing that, again, demand is very strong here. Then we've got our coolants that are just making their way up above 10,000 ISK as well, with higher volumes. So this to me is really an indication that CCP fixing some bottlenecks is definitely good for the game if you want more ships to be built and more ships to be available, and that the demand is there to actually do this. All of a sudden 10,840 for the sellers. Buyers a little bit hesitant here, keeping it just below 10,000 ISK, but still that's a good margin to work with, and on an increased price like that, that's actually decently impressive. I think that they will be forced to follow suit and go back above 10k for coolants as everything is ramping up yet again. Enriched uranium holding on the price despite lower volumes. That's a little bit strange. Everything coming together though. You can see here the buyers basically giving up as those minimum prices are rising towards 12,500, 12,300 for the sellers, 11,900 for the buyers. Yeah, as expected, very narrow margin. So despite the lower volumes, the demand demand is here. It's just that we have crazy high prices, 25% above coolants, construction blocks. That is of course very expensive. Integrity response drones able to stay above 2.5 million as well. Decent volumes on this one. 2.7 almost for the sellers, to 3 almost for the buyers, but still a very strong average. Then we get our mechanical parts, and that is clearly a little bit of response here as well, going up to 12,500 disc as well. Even historically speaking, amazing price, and basically really confirming that I sold too soon, although I also did skip some of my mechanical parts because they fell below 9,000 disc. But I sold a couple of weeks ago, so probably around this period here. Sold a lot of my mechanical parts, and obviously it would be better to sell now at 12,900 disc. Just everything is gone. 12,000 for the buyers. They have no choice. They have to show the market that they're willing to pay a higher price here. Demand is very strong, and this is super easy to make. Barren planets available everywhere, and you can make a decent amount of mechanical parts on a single planet, even in high sec. So this is really crazy. Very big response. And we remain at basically breakneck speed for the economy compared to everything that happened. And here we get another one that happened during the after the resource bonanza, when we got the resource crunch introduced by CCP. This is actually very interesting, and let's keep this in mind. What is definitely different as well is that CCP is clearly not only actively monitoring the economy and the output for industry and things like that, but is also very willing to intervene when there are bottlenecks. And I personally then also think that if things would drop off on industry, right? They would start to stockpile huge amounts of resource and things like that. That CCP will then also intervene, such as with the moon mining, being willing to nerf the output of some activities in the game. So we're definitely in a different situation. We're no longer in the purest sandbox out there where everything is static and just do what you want. No, CCP is actually way more active in the game here to keep the game healthy. At least that's the stated goal. Let's hope that the game, that the goal does not eventually flip into monetization opportunities. But yeah, CCP and EVE Online have been out long enough that I personally have faith in them. That the idea here is not to then create scarcity and then to start to sell stuff, but basically to avoid the problem of like basically free ships and things like that. That loss no longer has meaning. So miniature electronics here, look at that, 19,000 ISK for a refined PI material, 14,000 for the buyers. I definitely sold too early, but I did not personally expect this type of response. More minerals available, even more PI needed, even higher prices. Eventually maybe CCP will come in here as well, because my historical perspective has always been that 10,000 ISK for a refined PI material is actually a normal good price. So even before both the resource crunch and the resource bonanza period, 10k was normal price for PI. They don't want this to go too high either, because it is one of the most passive ways to produce stuff in EVE Online. But this is definitely another potential bottleneck that is starting to show up, because these are very violent swings. Supplies are not ample enough here, and this could really be a sign that PI is another bottleneck that is starting to form in the large ship production. Then we've got the nano factories that are still slowly heading down. A couple of volume spikes here though, so this could change eventually. 850,000 for the sellers, 828 for the buyers. That's a narrow margin here though, so very strong demand, but at more reasonable prices, you could say. Organic mortar applicators though, getting back to the highest price we've seen all year. 900,000 for the sellers, a million coming into view. 835 for the buyers, they have no choice. Recursive computing modules, 1.25 million, also plateauing now at its highest range, getting up to above 1.3 million for the sellers, almost 1.2 million for the buyers. again, the demand is clearly there. And then our robotics, they're getting so close to that 100,000 disk, which is my historical reference for specialized as well. 98,000 for the sellers, 92,000 for the buyers. A little bit more oomph in this one, and I will probably change my setup, hunt for those, I think it's plasma planets, and then start building my own robotics. You can actually make this very cool, specialized PI on a single planet. It's very slow going, of course, because you get that extra tier in there, but you also create that extra value that is basically coming back, because I do think at 62, 65k, it was just better to make the raw materials, coolants, mechanical parts, especially because they, as you can see here, already had good prices. A little bit of a difficult time in spring, but then summertime 10k and above was easily possible. That was way better than our robotics charts that only slowly adapted to the new reality. So yeah, I'm very excited actually. A lot of these specialized are also getting back to 100k, and that means that I think we could consider the switch, because if CCP also is going to intervene on anything, it is clearly going to be on charts that do something like this, and not necessarily on the specialized PI materials that are, in my opinion, at this point only recovering their normal price ranges before all of the resource stuff. Rocket fuels continuing to climb. You can see those max prices touching 14,000 disk as well. 13.9, 14k. Not a lot available here. 12,000 for the buyers. Then we get our self-harmonizing power cores that are starting to come back down a little bit, but at a very high range. 2.2 million for the sellers, 2 million for the buyers. So that's basically in check, plateauing at its high range. Our smart fab units are above 75k, still 85 for the sellers, 75 for the buyers. So sometimes you do have others, PI materials that still have relatively low volumes on some days. These are a little bit harder to get to a certain price point, especially in a structural way, but they have more volatility, so their potential for trading, of course, you can see that here, 50k, 100k in 3 months is very high, but the low volumes do make it a problem to trade in significant numbers. Sterile conduits holding at 125, 1.2 million, and almost 1.2 million for the buyers. Again, strong demand here. Then we get our supercomputers that are at 98,000, just below 100,000 as well, 90,000 for the buyers. And again, the erratic volumes make it a little bit harder on this one to make it, but it's slightly better clearly than our smart fab units on the volumes, and as a result we get a chart that looks a lot more like the robotics one, but the upswing to 100k is a little bit harder here. Then we get our synthetic oil coming down a little bit, but from a 1-year high point. So again, a refined PI material, 11,700 for the sellers, above 10,000 for the buyers, is definitely a great price. Synthetic synapses coming back down a little bit from a 1-year high point as well, 115,000 to 97,000, has that extra built-in demand from being implant related. And then we get our transcranial microcontrollers easily floating right around the 100,000 ISK mark. This is basically this part of the chart here, last 3.5 months, is basically what I remember specialized PI materials to be at. Below 100,000 ISK, yeah, maybe hold off a little bit, not the best price you're gonna get eventually. And then you get periods here where clearly you can sell above 100,000 ISK, and that's when I would always try to trade my well, it was my robotics back in the day. Then we get our water-cooled CPU that are definitely confirming the trend, although having a harder time as well. Look at the recovery here for the volumes. Clearly there is more activity since the expansion as well, and more demand for water-cooled CPU. Availability, not great. Let's take a quick look if there's anything in Tranquility Trading Tower. Not exactly in competition here. 11,700 for most sellers, but the buyers are holding off. Of course, they are used to water-cooled CPU below 5,000 ISK, so that one has that big catch-up done. But this is a very clear sign of more activity in the game, and especially since the expansion, the average volumes for water-cooled CPU up substantially and bringing the price at least somewhat in range of the other refined PI materials. And then finally, the wetware mainframes continuing the climb, and in my opinion, continuing the trend that, yeah, there's a lot of capital chip production happening out there. 2.3 million for the sellers, 2.2 million for the buyers. So another very, very strong week in PI. I sold like 3-4 weeks ago, I think it is. I clearly sold too early, but these are starting to be kind of crazy prices as well here and there, and so let's not forget that CCP is willing to intervene here. I personally would not wait too long if you've got investments in your PI where at some point you're expecting to take profits, because these charts are starting to not be too healthy. These jumps, especially here in the mechanical parts, I don't like this. Full recovery, no time for organic motor applicators. So everything that the market tried to do here, robotics getting to that normal price point, rocket fuels 13k. This is also, in my opinion, not sustainable in the long term. Now perhaps CCP will need a little bit more time, right? If we compare this, like I would say maybe Megasite and things like that were some of the charts that CCP looked at before deciding to intervene, a 3x in 7-8 months, and then we're really plateauing here, showing that extra demand is there, but it exists in PI as well. I would not be surprised if eventually they decide to do something about this, because, well, this is very passive as well. You're creating a lot of incentive for players to try and go that passive route, which is, in my opinion, not what CCP wanted. So that is why I personally am a little bit afraid, in a sense, that these high prices won't be here forever, and that there may be something brewing behind the scenes. I think we have to, at this point, when we decide on investments and when we decide on a trade strategy in EVE Online, we have to keep that, basically that central bank role that CCP is playing now. We have to keep that in mind as well. Next up, Advanced Moon Materials, 3110. There we go. And here also CCP was willing to intervene in Advanced Moon Materials, cutting the yields for moons by 25%, and we saw last week that did have a decent impact. Let's see if it's basically continuing. Here is crystalline carbonite, and yes, it is making its way back above 150 ISK, 161 for the sellers, 144 for the buyers. So a substantial recovery and a real bottom that has formed here in crystalline carbonite. I think people that have invested certainly in those tied to the Tech 2 ship production or the faction production lines will be very happy here. I have a little bit of meta materials, but we'll see if I'm lucky there as well. Then we've got Caldari. So here is titanium carbide, also basically doing a full recovery on the 1 year chart. 190 almost for the sellers, 177 for the buyers. And so if you bought at those lowest price points below 100 ISK, you're already looking at almost 100% profit. For the Galente one, you could have easily bought below 100 ISK, so there's also another 60% profit that you can make at this point. My advice as well on this, right, especially if you've gotten some big volumes like here and here, is to not crash the market, right? Don't take all your profits right now. Clearly CCP came in, changed things, and that is here to stay. So just like with the Isogen, right, don't block prices at a single range because you're putting 1 billion of units in one go. Smart traders, I think, will slowly start to take their profits, but are willing to, for instance, wait out a new patch with an allegiance system that could create even more demand for maybe Tech 2 ship production if the right content comes out, or action in nullsec could create real opportunities at even better prices. For Minmatar, we've got, where the hell is the M? Here we go. Ferrite carbide, also doing that full recovery. Clearly the impact is now being felt on the market. 185 for the sellers, 138 for the buyers. Again, you could have easily bought this below 100 ISK. There's another 80% profit. And then for Amar, should be inevitable that this happens here as well. So you could have bought these for, let's say, 110 or something like that. Must have been doable. 175 for the seller, so another 50 to 60 ISK profit. That is, of course, clearly a CCP intervention that is showing up here. Next, we've got our metamaterials. So here are the photonic metamaterials for Galente, and yes, we also have a bottom that has formed, but you can clearly see here the market is hesitating a little bit more. I think it's more down the line of certain production cycles, so maybe there's a little bit more reserves here. Honestly, I bought some stuff here at really low prices, but I will again have that patience to scope out the market, maybe take a little bit of profit, but I definitely want more powder to be dry, because especially here in the metamaterials, I would not be surprised if there's actually reserves that the market needs to chew through before we find the actual price range. So photonic metamaterials are up to 10,000 for the sellers, 9,200 for the buyers, and so down here you could have bought for like 6,250. Then Caldari, it's non-linear metamaterials, right? Same response right here, going up to 15,000 for the sellers, 13 almost to the buyers. Could have bought this at around 10,000 disc, 50% profit right there. So again, I think I'd wait it out a little bit more here. Then for Minmatar plasmonic metamaterials, a bit of a response here as well, not a full recovery on the 1 year chart. 14k to 13k for the first buyer coming in, easily bought below 10,000 disc just less than a month ago. And then for Amar Terahertz metamaterials, full recovery to a year ago at 15k, another 50% profit. That is definitely potentially on the books for those like me that have bought some cheap advanced metamaterials, excuse me. We still have some of the other advanced movements to go through as well. Let's see if the response is here. Yes, it is, of course. That was sort of expected. So fermionic condensates 55k. We got our ferrogel back to 25k. I mean, I'm going to go through the list here unless we see something absolutely spectacular. We can basically expect a clear bottom to be formed here in all of these advanced materials, as this is the impact from CCP's change. Now, it's not a full recovery across the board, of course. Some will have more reserves, other will have just less interest in the industry cycles in general, but very clearly you can take profits if you bought at the lowest price points for these. Nanotransistors here, phenolic composites, yeah, that's an unusual one. 1 year high point heading for 2,000 disc here, almost 1,900 for the sellers, 1,620 for the buyers, and you could have bought this below 1,000 disc. So that's another one, like 100% profit if you bought at the right time, which was, well, here the whole month of June, a little bit in May, even in July, and then here full summer. August up until October, you could have easily grabbed your very, very cheap phenolic composites. With, of course, keeping in mind, I mentioned it, I think, quite often, that CCP was not going to, was likely to eventually do something, because the Tech to value proposition started to become a little bit of a problem, and so here it is. And this is also again a sign that they're willing to tackle and to actively monitor and then do something about overabundance in certain places into the economy. So it does basically mean that we've got our central bank overlord watching stuff and managing our economy in a more active way, which is, in my opinion, very, very understandable, because if you leave it up to the players, and certainly some players are willing to go very destructive routes sometimes on stuff like games, and they want EVE Online to stay healthy. So here is pressurized oxidizers back well above 10,000 discs as well, 12,000 in fact for the sellers. Reinforced carbon fibers, another 1 year high point on that one, almost 15k. So here another 100% profit through pretty much the entire summer of buying if you had done that. And then our ceramic fibers, 200 to 300. And so part of the equation is going to be to spot those real imbalances that are being built up by the players, and that's when potentially we can get some CCP influenced trades to happen. And yeah, this one, I think I sort of called it. You can never tell when CCP decides to come in, but very clearly I think that Tech 2 was becoming too cheap. So here is that CCP intervention, and here are those potential trades. In minerals, I thought they would perhaps give a little bit more leeway. Still, that's also like 4x easily on the Isogen over 1 year, and then the Megasite and the Zydrine stuff was also starting to get pretty crazy. So that was quite noticeable. And then now I'm sort of warning for PI. Which is like the most passive resource faucet in the game, that some of these are not looking too good on the opposite side. So not too cheap, but actually too expensive. And I would see potentially CCP doing something about that at some point. Next up, we've got the Tech 2 ships coming in at 39.20. There we go, and let's see if there's already an impact on this one as well. So this is actually where I have more investments. I've got pretty much half, I think, this list, and some of them I've got multiple investments just because I was expecting this CCP intervention. Now this could take a little bit more time. I thought maybe they would do something about Tech 2 ships themselves, but no, they decided to go in on the advanced move materials. But here is the Basilisk, for instance. So you had several months here where you could have bought this for close to 100 million ISK. We're back at the 133 for the sellers and 120 for the buyers, and clearly here now we also have a little bit of a trend break with a higher peak, but it's far more careful than in most of those advanced move materials. Cerberus also doing a little bit of a jump, but you can see we still have old supplies, more stockpiles of these Tech 2 ships that were so cheap and abundant that we will have to go through. So I think still patience for the Tech 2 trade is what we want, and I think basically for me I'll be waiting for another great war somewhere in Nullsec, and that's I think when I'll be able to make the most ISK. But we're back at 137 million for the Cerberus as well, and yeah, the lowest price point was less than a month ago, below 130 million, so it's not a lot of profit just yet, but clearly something has changed here as well. And on those that are a little bit less overabundant, you've got the big move. So here is the Curse, for instance, lowest price point below 130 million, 7 months below 150 million, and now selling for almost 200 million units ISK, and then 158 for the buyers. So the buyers are very careful, and I think that's also normal because potentially there is still a big stockpile of curses out there that can crash this market. Players and traders will notice these and these price spikes, and so we can expect some very violent responses on the downside here as well. I do think that there potentially is like another 100 curses being brought in, bring that price back down, but then players notice, hey, this one was already very much in demand, so let's buy more. So perhaps we can start to see some more volatility in Tech 2. The Damnation sort of anticipated on this, so it had a bottom mid-November, was then steadily climbing back above 250, and yeah, we still have plenty of them, but it is at 260 million now for the sellers. And I, for instance, bought my EOS at 254, I think. Way too early, but I definitely wanted that one because potentially I'll fly it as well. Let's first take a look at the Deacon, and here showing that it's definitely not across the board. The trend does seem to be that basically the most used ships will have potentially the most volatility, and then larger ships will have big stockpiles, and so might some of the other smaller ships, because here is the Deacon actually close to a low point. Less than 14 million for the sellers, 12 million for the buyers, and maybe in some fleets, some Deacon wings make sense. So if you're still looking to get in on a Tech 2 potential trade, and now looking at what's happening with advanced movements, a chart like the Deacon does look pretty good, but of course the problem is you can see today's daily average is above the 5-day moving average, so it's not easy to get a buy order to trigger, but you can definitely still, in my opinion, buy cheap Tech 2 here and there. The Eagle has recovered as well and is now back above 130, 134 to 125. So here part of the meta, I think, after the nerfs, especially of the Munin, and definitely an interest above 130 here as well. Then here is the EOS that I bought, again, as I mentioned, at 254. Was that the best price? No, look at this here. You could have bought this well below 250 quite easily. August, September, even in October, you still had those opportunities, so you could follow the trade and do even better than me. But here we are, 304 million for the sellers, 288 for the buyers. So I am looking at a potential 45 after taxes, probably something like that, million profit on the EOS. You could take it, right? But personally, of course, I bought a lot of these as well with the idea that eventually I'll fly them and I'll use them. So I can have the patience to wait for like a real price spike, a 1 year high point to form or something like that. But it is definitely here on some ships, and then others are again showing signs of pressure. Here's the Aries. 40 million for the sellers, 33 for the buyers. You're not going to get that below 30 million anymore. That was possible through the summer, but still, this is a very good chart to jump in. So if you want to still buy something, here is the Aries. Try to buy below 35 million, and I think that on the chart here is definitely not bad. So it is possible. Here is the Flycatcher then, the volumes that have no real visible impact on the price. 44 million for the sellers, 39 for the buyers. That's like the in-between space. I'm hoping though that we can get more volatility to show up here. Then we get the Guardian that last week shot up to 150 on CCP has nerfed advanced movements. There's going to be a real change, but then of course players notice, whoa, we can take profits, let's bring in the supplies. That's all of. So here we get a little bit of like panic buying, but then players notice, oh, I can get 140 million for a Guardian, let's go, let's try. So that's these volumes, and then the price response is back down substantially, down to 123, 112 for the buyers. And maybe on the Guardian, that is perhaps a tradable and rideable wave. I would say, especially if you don't have any of these yet and you want in on the Tech 2 trade, look for this pattern, overshooting by suppliers. Then you should also take a look at volumes and stuff like that, right? Big volumes coming in despite these lower prices. Yeah, this looks pretty good. You can see how those minimum prices are still falling here. And so I would say at this point, 113, 114 million, you're very likely to actually grab a Guardian there, which I think longer term again could be a good trade. Heretic back up a little bit, but also, well, actually those minimum prices going up, so pulling away from that bottom 30 million buy. We're up to 33 on that one. The Hound, so our stealth bombers, were the best tradable ships of this entire period that did have volatility. Went back below 15 million, buyers coming in, but still a little bit careful here. 18 for the sellers, 16 for the buyers. So now we're basically in that place where you don't want to sell, you don't want to buy, but a little bit of action in nullsec and a couple of stealth bomber fleets that need to be replaced, and you do have your sell opportunities. So if there's one thing that I would be looking at, low prices, because that this ship can also easily be oversupplied. It is still stealth bombers. If you're looking to actively trade, now not in the Hound, but last week in the Hound, yes. I think I called that one as well. There's opportunities there. The Ikitursa showing signs of a little bit of pressure, 514 to 465. Now I don't really trade in the Triglavian ships. We're keeping an eye on this one just to get a feel of what's happening. And this is actually unusual. You get increased volumes and decreased prices, especially the minimum prices. So that to me means that there's ample supplies coming in for Triglavian ships. Then we get the Ishtar making its way back above 150. 157 for the sellers, 151 for the buyers. Next here is a Kirin chart that's still pretty low. Logistics frigates, maybe I'll probably look into buying a couple of these. Manticore to me looks kind of interesting, right? I don't think we'll touch 15 million again under the new moon material situation, but we are seeing pressure. 18 for the sellers, 17 for the buyers. I would try to buy basically at 17. Look at these supplies as well. Now you're definitely early, but you are in basically an oversupplied Manticore situation, and so you need to wait for something like this to happen, a big group to decide we need a Manticore wing, we need several Manticore fleets, let's buy a couple hundred of them, but then this is the time to be buying. Nemesis, sort of the same story. Of course, last week or 2 weeks ago was a better time to buy, but we are still well below 15 million. Yeah, you're buying below 15 million. Again, the price spikes 20, 25 should eventually be possible on a little bit of action somewhere. Third partying in stealth bombers is very popular. Nighthawk clearly recovering on the entire news as well. So command ships are back at 300 million for the sellers. So I've got one of these on the cheap as well. Then we get our Oneros, 130 for a logistics cruiser rather than well below 100 million. So another one, right? If you bought here through the summer, or here, well below 100 million, you're looking at a potential profit already. Purifier looking decent, I think, for, well, actually at the tail end. Unfortunately, I think we're basically just too late to be jumping in. 16 million, 15.6. Yeah, you could still do it though. I feel like they're pretty cheap. Rook, 150. You could probably still try to buy at this price point, but it's not the best. Saber though, right, recovering back above 40. So just 2 weeks ago, you could have bought these for 35. Now they're above 40, just hard to see enough volatility here. Scalpel very stable and not in the buy place. Scimitar, bit of a jump as well. So logistics cruiser 130, almost 120 for the buyers, and you could have bought these close to 100 million. Slipnir going back up to 300. Vagabond, nope. And then the Zarmast is showing some interest, but actually declining volumes compared to the increasing volumes for the Heretic. Might be tied to the Winter Nexus event, of course. These are very, very powerful Tech 2 cruisers. So for the Tech 2 ships, I would say for those that are looking at taking some profits and you manage to follow along and buy at some of the 1 year low points, you can already start to take some profits here and there. For actively trading, I personally still really like the stealth bombers for their potential volatility. They have been the most volatile in Tech 2 through this entire period, but I think we can start to look differently at the market here, with CCP having done something about advanced move materials, and who knows if they're looking at rebalancings and things like that, but especially in those like fleet doctrines, I think there is potential here to not just start keep investing, trying to buy very cheap ships, and keep in the back of your mind that you probably want to buy a lot of those that you might be willing to fly as well, because you'll likely be stuck with them for a long time. We are in a different market in my opinion, and I think that we can start to look at maybe selling, taking some profits if we want to, but also at signs of more volatility. Other reasons why all of a sudden stealth bombers might go up, command ships might go up substantially, why the curse does shoot up all of a sudden and very clearly has a sell opportunity right now. Part of the meta, part of what's happening, part of the CCP cycle. It's important, but we can start to look at it, in my opinion, in a different way rather than just trying to buy as cheaply as possible. And then we've got the Tech 3 ship markets at 51.55. Like that. Let's get started with the destroyers. Unfortunately, while we are making Tech 2 a little bit more expensive, I don't think it's enough to make our tactical destroyers worthwhile, and certainly the market is still pretty anemic. You can see the volumes are terrible, price is not going anywhere, 47 to 43 million. Not much to do here. Hecate going up, all right. That is interesting. I did not expect it, but clearly a little bit of trend break on low volumes. We get high prices, 54 million for the sellers, 49 for the buyers. Basically a bit of lack of availability, creating a slight sell opportunity. Will we see more volatility? I don't see any reason to expect that, but I'm surprised. This is a first little bump here, first little bump in a very long time. Then we get the Jackdaw basically recovering from a slight slump, was buyable below 45 for a bit, back at 50 for the sellers, 46 for the buyers. I still don't see it, honestly. And then we get this Vapel where buyers are also starting to drop below 40 million, 43 to 39 million. So a lack of demand here is, if there were reasons to expect more volatility, this for me would be a sign that, yeah, maybe we can try to buy as Vapel for some reason. But unfortunately, I don't see the reason why all of a sudden we would get serious price spikes in the tactical destroyers. Things are different in the cruiser markets though. So here is the Legion starting to come down, and this to me is also actually pretty interesting because someone mentioned that in the comments like a couple of weeks ago, that the Amar price spike was probably due to the Winter Nexus, as it is an amazing ship for the Winter Nexus, if I'm not mistaken, resistance wise and things like that. It's really good, and this was actually a very where the market really anticipated the Winter Nexus coming in, and so I think it's the third or the fourth one that we've got, so the market knows this is eventually coming, and as a result it's starting to front run the Winter Nexus more and more, right? We just got it here mid-December, and prices are actually falling during the Winter Nexus. It's a month before that you had to sell your legions to those that were gonna run it in a legion. So that's very cool. That's very unusual. In the sense that usually we see a response from the market after the fact, like a CCP announcement. But yeah, 188 now to 175, clearly a very sharp drop off. I would still wait it out. I think this will have more momentum, and my jumping point clearly on this chart is close to 160 million for the Legion. Then we've got the Loki that's actually going strong, so I think that as an alternative, right, people go in for a Legion and are looking at this chart, it's like, man, that probably looks a little bit expensive, so what's my alternative? When we get the Loki, that's actually, if I'm not mistaken, considered the strongest of the Tech 3 cruisers, that's back up above 200 million, so another sell opportunity right here. And not that long ago you could have bought this probably for 180 million. Then here is the Proteus that had a, I can't really explain this one, slightly higher volume, so maybe someone came in and bought a Proteus fleet as well while it was still available at close to 180 million, but that one has already basically completely recovered, is back at the 190 to 177, so you're again buying a Proteus below 180 million. This is starting to stall here, so yeah, if you want to jump in on a Proteus, I think this is the time to do so. And then we've got the Tengu that also has, I think, maybe a Winter Nexus bump back up to 200 million. But here in October, that's not, I don't think that's not tied to the Winter Nexus. So something did happen as well, maybe across the Tech 3 spectrum, to cause some price volatility, although I'm not seeing it in the volumes here. Still, they are expensive now, 200 million to 180. So if you absolutely need that Tech 3 trade to scratch that itch, I'd say buy potentially a Proteus and sell a Loki if you've got a cheap one still lying around. But I think this is very interesting how the Legion, I think, front run, did a front run, at least partly, maybe it's this bump here as well, on the Winter Nexus rather than a reaction to the Winter Nexus coming out. That's how I am reading this market. Tech 3 cruisers have that trade potential, although for my taste, I would wait for very close to a 1-year low point before jumping in. And then finally, we've got the extra product for the week, and for this week, it's been a while, so I'm choosing the ice products. They are coming in at 57.05. There's the timestamp. Let's go manufacturing and research. I think it's materials, ice products, so it's not that many of them. But we saw fuels, actually a little bit of volatility there as well. I think more tied to activity in the game, which is pretty high, so we see high demand, but I think availability is quite high as well. Well, here is heavy water, actually pretty expensive, above 150 on the 1 year chart, 163 to 145, so decently expensive. Volume wise, not that great. Then our isotopes are mostly tied to fuels. All right, volatility, I did not expect that. Usually when we spotted it, we were here down in these low points. You can see here a very slow and gradual downtrend to less than 400, but not that long ago in December we had a spike up to 700 disc on a couple of days. Average prices managed to get above 600 disc, and we are settling at 550 for the sellers, 520 for the buyers. Hydrogen isotopes has a similar spike but not as volatile, went up to 500 disc and is clearly settling more expensive as well, 450 to 428. We'll go through the isotopes then, just to take a look. Man, nitrogen isotopes basically went up far more gradually over the last couple of months, made its way to 600 and is here and is staying here, 614 to 592, very impressive. And then oxygen isotopes touched 600, comes back down to the 500 disc range. This is, to me, rather unusual. We have very clear differences between the 4 isotopes. And nitrogen isotopes, very pronounced winner here in my opinion, and something that you can sell. I do think supplies will come in and bring us back in line a little bit more, but then helium isotopes, super volatile, very quickly spotted as well, supplies coming in, but settling at a much higher price than those 1 year low points. So showing that, yeah, keeping an eye across the spectrum, looking for 1 year low points, I think is a potential strategy to make trades, but you have to be more active in looking at it than I have been here for the ICE products, because several opportunities here that clearly were missed. Although if you have nitrogen isotopes, sell, best price in 10 months pretty much, so not bad. And then we still have liquid ozone to look at, also expensive on the chart, seeing a little bit of pressure at the tail end, but clearly a high range. And then strontium is doing rather well on the 1 year chart as well, 2,900 for the sellers, 2,800 for the buyers. A little bit of pressure here, but basically ICE products are doing quite well. Bit of volatility in the isotopes and rather expensive other ICE product materials as well. So ICE mining might be an option as well for those that have it available close to their home systems. That's going to be it for this EVE Talk, guys. Thank you very much for watching, and as always, I'll see you next time.